7 reverse mortgage truths that most people get wrong. Welcome to Mortgage Tips and Bacon Bits. I'm Sean Segaloff, and if you find this information helpful, please don't forget to click like and subscribe. It really means a lot to me. Truth number 1, a reverse mortgage is a tool, not a scam. It's designed to help people stay in their homes as a primary residence while accessing their equity. It's the right tool for the right person, no different than any other mortgage program. You have to look at what your goals and your needs are versus what the program does and see if it's the right fit. Truth number 2, you keep ownership, but you must follow the rules. That's right, the title stays in your name, but you still have to pay the taxes, you still have to pay the insurance, if there's an association fee, upkeep on the house, all that is still your responsibility, and you got to make sure you're factoring that in as to whether or not this is the right loan for you. Truth number 3, there are different types of reverse mortgages. There's a HECM, HECM, which is a home equity conversion mortgage, which is a government program. And then there's also proprietary programs for jumbos and for condos that normally don't qualify. Finding the right one really all depends on your type of property and what your personal needs are, and finding out exactly which is the best fit for you. Sometimes you might qualify for both, in which case then we have to look at the rates and the fees involved and see what's the best fit for you personally. Truth number 4, you're not forced to make mortgage payments. You are still required, though, to pay your taxes, your insurance, and if there is any association fees, and of course the upkeep on the house. So don't mistake that, oh, if I take out a reverse mortgage, I'm never going to have to pay anything ever again. That's not true. Now, you can set up a reverse mortgage with a credit line so you can cover those expenses and essentially live expense-free on a month-to-month basis for your housing expenses. But that's something that really depends on what your personal goals are, and that's something we can discuss one-on-one. Truth number 5, the bank takes the house. That's a misunderstanding. What happens is when the loan is due, the house is what's guaranteeing the note. So let's say you decide to sell the property. They look at what you still owe, what you're selling the property for, and no different than any other mortgage, you pay it off. Now, what happens if something happens to you? I know a lot of people think, oh, if something happens to me, the bank takes the house. They don't take the house. And that brings us to truth number 6. Your heirs have options. Again, the bank isn't taking the property. That's a common misconception. What'll happen is your heirs have a couple of options. If they have the cash, they can pay off the note and keep the property. If they don't have the cash, but they want to keep the property, they can refinance into another type of mortgage. And then, of course, option 3 is they sell the property, pay off the mortgage, and keep the difference. The nice thing is a mortgage on a reverse mortgage is a non-recourse loan. So there's never going to be a situation where someone owes more than what the property is worth. Truth number 7, proprietary options matter when you're looking at jumbo loans or condos. The reason for that is again, a HECM, HECM, is a government-backed mortgage. It has loan limits. If you're looking to go over those loan limits, which a lot of properties these days are because of the high home values, then you're looking at a proprietary program, or a lot of people live in condos. And a lot of condos don't qualify for FHA mortgages, which is what a HECM is. It's an FHA government-backed mortgage. So to get around that, there's proprietary programs. That's why it's important that you work with a mortgage broker like myself, because we can look at the different options and find the one that best fits your needs. Do me a quick favor, share this with one person who needs the information, and don't forget to subscribe if you want more mortgage tips and bacon bits. Because don't forget, mortgages don't need to be complicated. They just need to be explained clearly.